Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, July 23rd, and we did have some big earnings today. In after hours, we did have Tesla, which combined between the day and after hours is down over 10%. And Google, which is down in post market 2.08%. And I will go over those charts because I did go over them yesterday. So we'll see how that played out. And let's start with SPY today. We did open today right above the 30-minute 200 moving average. And the first half of the day, we did struggle to hold that level. We came up, dropped back down, bounced on the 30-minute 200 moving average, came back up, and then we dropped back down to the 35 EMA. And remember, this 35 EMA did cross down underneath the 30-minute 200 moving average. That does make us bearish right now. And today we were unable to get this 35 EMA back up, so we still closed bearish. So once we dropped down to that 35 EMA, when we came back up to the 30-minute 200 moving average, that was a resistance. And you could see that in every candle afterwards. And then in that final candle, we dropped completely underneath the 35 EMA. So we did trade within the implied move today, but we did see resistance at some pretty critical levels. So SPY did close down 0.16% during regular hours, and right now we are down 0.38% in after hours. And switching over to QQQ, we did open here, finding some support on the 35 EMA. And remember, we did see that cross down right here. This was last Thursday, and that 30-minute 200 moving average was pretty high above our trading range. So we did open with that drop to the 35 EMA and tried to hold it. We did see resistance at that 1 hour 200 moving average. And then we dropped back down to the 35 EMA. This is why I always say know where your 35 EMA is. And then in that last candle, we did drop underneath the 35 EMA. So here we also did close within the implied move, and QQQ did close down 0.35%. And in after hours right now, down another 0.58%. That's definitely a pretty big move. You can see that post-market move is right here, right on top of that gap. You can see it off to the side. So right above 477, which just happened to be the bottom of the implied move. We just saw that in after hours. And VXN closed up 0.25%. And I already mentioned, but we did close within the implied move. So then switching over to SPX, we did see that move up to the 30-minute 200 moving average and definitely had trouble holding that level. We got above at first, dropped below, tried again, and got pulled back down to the 35 EMA. We are bearish here because the 35 EMA is underneath the 30-minute 200 moving average, so that is why we saw resistance there. And we did see a bit of support in the later half of the day on that 35 EMA, but at the very end of the day, we dropped underneath and we did close underneath the 35 EMA. We did cross down here with momentum in Stupid Willie, and SPX down 0.16%, VIX down 1.28%, and we did trade completely within the implied move here. And futures right now are down 0.41%. Since we don't have after hours in SPX, we'll look to futures to see that after hour move. And then IWM, we did open down. It's pretty funny that IWM does the opposite of SPY, SPX, and QQQ. And so we dropped down to that 35 EMA, and then from there we bounced, got up to the top of the implied move, traded sideways for most of the day, made a run outside of the implied move, but then we did close just within the implied move. Top of the implied move was at 223. We closed just under that at 222.63, and IWM did close up 1.06%. RVX closed up 0.42%. And we did close within the implied move. We popped out a little bit here for just a second, and we got pulled back in that last candle. So far, 4 out of 4 for closing within the implied move. Let's go look at the Dow. DIA did open right here. We did trade pretty flat here today. And remember, this one looks a little bit different because we only have weekly options here. So the Friday's contract, this was the implied move, and I did a reading on that over the weekend. So that hasn't changed. We saw that same range Monday and Tuesday, and then this smaller range is the 30-day average volatility. And today we did come up to that 35 EMA, and we're unable to get above that level with any conviction. We did see that as a resistance and push back down in that last candle. So we are not bearish here because the 35 EMA is still trading high above the 30-minute 200 moving average. We are neutral, and it is definitely showing that we are neutral. We have been trading sideways, but we are seeing resistance at that 35 EMA. So this 30-minute could catch up, and if we do find that 35 EMA dropping underneath, we could see lower. And the Dow is probably the best indice to look at when it comes to overall health of the market. So right now we are seeing resistance. EIA did close down 0.16%, and we did trade completely within the implied move here. All right, and then let's take a look at Tesla. Tesla did have earnings today, and during the day we did see a move down. Actually, let me take this back to the 30-minute time frame. So this was the intraday trading. We did open down to the 35 EMA, and then we did trade sideways. This is a critical intersection here with that 35 EMA, and it closed right at the level of the 30-minute 200 moving average. Now, as you can see, we did see a pretty big move down in after hours. So this 35 EMA is going to cross underneath the 30-minute 200 moving average, basically shifting the momentum to bearish, because once we got above that above the 30-minute 200 moving average with that 35 EMA, that is when we saw the build up to that rally, and this is basically going to close that rally out. That 35 EMA getting underneath the 30-minute 200 moving average turns Tesla bearish, and that will likely happen when we open tomorrow. And really quickly, I just want to take that to the 4-hour time frame. And this is the setup that I had yesterday. I actually had it on the 1-year time frame and 1-day candle, 227 to 277 with that bear gap above, and then that 35 EMA. You could see post-market 226.91, which is this red line right here. That takes it right to the 35 EMA on the 1-day candle. So let me switch that back to the 4-hour and show the aftermarket price. That is, let's look extended trading. So this is the post earnings drop, and you could see that we are settled exactly at the bottom of the implied move that I gave you guys last night. So hopefully some of you guys made some money. This is that 35 EMA from that 1-day time frame. But yes, bottom of the implied move for earnings was hit for Tesla. So Google, we did see, let me take this out of extended hours, just look at regular hours really quickly. Okay, this is what I set you guys up with last night for earnings. 169 was the bottom of the implied move, 195 was the top, and what I noticed was this 35 EMA was flat, and that we were also struggling to hold that level. And we also had Stupid Willie turned over and with that bearish momentum. So that is the way that we went into earnings, and then moving it back into extended hours on the 4-hour, we did see Google actually closed completely flat today, 0.07%, and in after hours we broke that 35 EMA that was flat, and that is a big deal. Taking it back to regular hours and 1 year, that 35 EMA has defined the uptrend ever since we bounced here in March. We bounced on the 1-day 200 moving average, got back above the 1-day 35 EMA, and that was our rally right here. So getting underneath that level today is a big deal, and we could definitely start seeing a correction from here. So far that is what we have going on with earnings today. And did I go over everything? I think I did. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like, and don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. There is also a thank you button underneath the video, and if you took an awesome trade and you won really big due to something I said, then don't be afraid to buy me a cup of coffee. It's an easy way to show appreciation for all the work that I do each night to put these trading ranges together for you. And if you have any questions at all, leave me a comment. I do get back to every single comment. Alright, so starting in SPY, tomorrow's implied move is between 550 and 558, and that is from options. And the 30-day average volatility is $1 wider in each direction, 549, and that almost lines up with Thursday's implied move. That's 558 to 559. And to the upside, the first level to look for is going to be that 35 EMA. Always know where your 35 EMA is and what it's doing. And today we did see that as a level. When we dropped, we did start to see a support there. We came up to the 30-minute 200 moving average, and then we lost both of those levels. So we are underneath the 35 EMA. That is the first level to the upside. And right now, ES futures are trading down 0.36%. So at open, that would bring us down here. The momentum on that 35 EMA could shift. We could open with that 35 EMA pointing down. And if that is the case, definitely look to that as a resistance. And if we do get above that level, then the 30-minute 200 moving average, which was also resistance today, we actually opened above that and we tried to fight for that level and we lost it. Then when we came back up, resistance, resistance, resistance. So that is a resistance to the upside as well. We also saw that as resistance here on Monday. And before that, when we dropped above that, we bounced and we could not hold that level. It did not offer any support. So as of right now, 30-minute 200 moving average is a resistance. If we do get above that, then 558 is the top of the implied move, and 559 is the top of the implied move on Thursday's contract. Above all of that, we have that island top, and that goes back to right before we dropped. We saw an up gap, and then we pushed up to make new all-time highs, and then we gapped underneath that up gap. So a really strong resist is outside of our trading range. It's pretty high up. We probably won't encounter that tomorrow, but just to know that that is there is important. And then to the downside, we do have the lows from Monday right here, which is at the top of that gap. That is at 551. Within this gap, we have the 1 hour 200 moving average, and we did see that 1 hour 200 moving average right here. And remember, it was only wicks that was underneath it, so all of the bodies settled above that level. We didn't really bounce on that level, it just happened to line up with the bottom of the implied move last Friday, and that level is down here at the bottom of the trading range. 550 is the bottom of the implied move, and 548 is the bottom of the implied move on Thursday's contract. And you can see that 50-day moving average is starting to be at least within view. It's not within the next 2 days trading ranges, but it is down here, and we are definitely overdue to meet up with that level. We don't have to drop to that level. We can consolidate sideways, wait for the 50-day moving average to catch up. Okay, so that was SPY. And switching over to QQQ, the implied move over here is between 476 and 486, and that is from options. The 30-day average volatility is a little bit wider, 474 to 487, and that is also the implied move for Thursday's contract, 474 to 487. And to the upside, the first level to look for is that 35 EMA. We did bounce up to that level to start the week, and ever since then we have been seeing resistance at the next level up, which is the 1 hour 200 moving average, and we have not been able to hold the 35 EMA right now. So right now NQ futures are down 0.54%. So if we open near that level tomorrow at open, then we could see this 35 EMA start to tilt down and shift our momentum down. So the 35 EMA is the first level to look for. 1 hour 200 moving average is the second. We did see that clearly as a resistance today. And then 486 is the top of the implied move. 487 is the top of the implied move for Thursday. And outside of the trading range, we have this huge bear gap right here. I just want to measure it out really quickly. It is 1.5%, almost $8 wide. And we have that 30-minute 200 moving average within that gap. So lots of resistance to look for to the upside. And then to the downside, we do have Monday's lows right here. That is at the top of the up gap from last Friday going into Monday. We did come down and fill that gap a little bit, and that top level is at 477.88. Then the bottom of the implied move is at 476, and on Thursday's contract, 474. And the 50-day moving average is right underneath all of it. We are super overdue to touch down with that level, and it is just outside of tomorrow's implied move, and it does appear in Thursday's implied move. That right there would be a super healthy pullback. The 50-day moving average and this support level line up as well. Friday we bounced right here, and we did see that level as a support at the end of June right here. So that is 473.80, and that is right outside of Thursday's implied move and right there with the 50-day moving average. So this could offer some support. I would definitely expect to at least see a technical bounce on the 50-day moving average while the market reevaluates where we stand after we touch down and what the technicals are saying. So that is QQQ. And switching over to SPX, the implied move over here is between 55.20 and 55.90, and that is from options. The 30-day average volatility is a little bit wider. I didn't label it down here, but it's also 55.10 to 56.05. Let me actually put that in. 55.10, and then the implied move on Thursday's contract lines up perfectly with that 55.10 to 56.05, and to the upside we do have that 35 EMA. And just remember that 35 EMA came underneath the 30-minute 200 moving average. This is bearish. I did mention that yesterday, and as soon as we came up to the first resistance, we did see that as a resistance. So we did get pulled back down and under the 35 EMA. As long as the 35 EMA is trading underneath the 30-minute 200 moving average, we are bearish. And that level is the first level to the upside. ES futures are trading down 0.37%. So again, if we open near that tomorrow, and we did have a pretty solid sell-off in Tesla and a little bit in Google, so we could see the S&P down tomorrow, and if we do open down, this 35 EMA will shift momentum, and we'll start seeing that as a resistance that is pointing down. But if we do get above that 35 EMA tomorrow, then that 30-minute 200 moving average is at the top of the implied move. We did see that level today as resistance, and the last time we dropped underneath it last week, we came back up and immediate resistance. This level offered no support at all. So currently, 30-minute 200 moving average is a resistance level, and if we do get above that, 55.90 is the top of the implied move, and 56.05 is the top of Thursday's implied move. Then to the downside, we do have this up gap from last Friday going into this week. The bottom of that gap is at 55.05. Top of that gap, and also Monday's lows, is 55.28.50. 1 hour 200 moving average is running right through that gap, and also the bottom of the implied move. Bottom of the implied move is at 55.20 and 55.10 on Thursday's contract. And you could see at the bottom of the screen here that 50-day moving average is coming into view. We are definitely overdue for touching down with that level. I personally have this on my radar. If we do start breaking some of these levels, if we do stay bearish, then a little bit further out in time, I am looking to see that could be a level that we hit. We don't have to drop down to it. We could always consolidate through time while the 50-day moving average catches up, but of course we can drop to it. And if we do, I would expect a technical bounce because that is a major moving average. So that is SPX. Switching over to IWM, the implied move over here is between 219 and 226, and that is from options. And the 30-day average volatility is quite a bit wider. We've been having big moves over the past 30 days in IWM, and that is between 216 and 229. And on Thursday's contract, the implied move is between 218 and 227. And this is the most bullish setup of all the indices. We do have price trading above the 35 EMA, the 35 EMA trading above the 30-minute 200 moving average, and then we have a green signal line down below. And to the upside, the first level to look for is going to be where we bounced off of the 35 EMA and then came back down. So right around here, 224. That's pretty close to where we got pulled back a little bit today. And then if we get above that, 225 is the top of the implied move. And at the very top of the trading range for tomorrow, we do have this bear gap. I'll zoom out in just a second to show where that bear gap is. And we did, when the last time we came up to it, we actually saw selling pressure even before we touched that gap. And before I zoom out, I forgot to mention that 226 is the top of the implied move, and 227 is the top of Thursday's implied move. So this bear gap, if we zoom out, it is right here, and that is November 22nd, that week. And it is, you can't see it on the weekly candle because it happened in the middle of the week, but if you go back, we do have a gap down, and then we did see that level as resistance here. And then when we came up to that the other day, we just got pulled right back down. And that is the power of a bear gap right here. So the top of that gap is, the bottom of that gap is at 226.95, so 227. Top of that gap is, 228.73, so 229. That pretty much lines up with the top of the 30-day average volatility. And then to the downside, we do have the 35 EMA. That is our little magnet EMA. If we do come down to it, it is definitely possible that that is a support. We did drop down after getting above it on Monday, and we dropped down right here and saw a push up. So if we drop down to it, so far it is a support this week. And then the bottom of the implied move is at 219 and 218 on Thursday's contract. And then underneath all of that, we do have the 30-minute 200 moving average. And just to look a little bit deeper underneath the trading range, we do have a couple bull gaps from last week. And this one right here is from Thursday going into Friday, not last week, but the week before that. That is where we broke out above this level right here. This red line is, I'm going to zoom out in just a second, 211, and that is a really long-term resistance. And then before that, it was a support. I'll show that in just a second. But then we have this second up gap. This is from Friday going into last week's Monday. So we've got 3 levels of support, but maybe we can even call it 4 right here, that are just outside of the trading range. So zooming out, that red line goes back to right here. You could see it was resistance, and that was March of 2022. Before that, this was after the COVID era right here. We had that huge rally, and then we consolidated for about a year. But that 211 was support, and then when we broke down and had that pullback of 2022, that was where we saw resistance right here in March. And then again, we saw it in March of this year. So breaking out above that 211 level was a pretty big deal. And on the weekly time frame, again, you could see Stupid Willie right here. It did just turn green. So we could legitimately be rotating into small caps right now. And that level might be respected as a support like it was back in 2021. All right, so getting back on that 30-minute time frame, that is what we have underneath our trading range. So bear gap to the upside and some supports to the downside. I didn't mention this level right here. We did see a little bit of support around 216. That is also the bottom of the 30-day average volatility, and that 30-minute 200 moving average is right there as well. All right, so that was IWM, and let's go take a look at the Dow. DIA. So this one is set up a little bit different because DIA only has weekly options and the others have daily options. So I had to set this one up a little bit different. This is the reading I got over the weekend for the implied move for DIA for the entire week. And then these are the 30-day average volatilities, and I get this reading each day. So for tomorrow, the 30-day average volatility is between 398 and 409, and then to the upside we have the 35 EMA. The 35 EMA has been a clear resistance today. We actually opened the week with a little move up, and right before we got there we got pushed back down. We came back up today, and every candle that we had, we saw that level as a resistance. And then that last candle of the day, we got pushed away from the 35 EMA. So that level, which is the first level to the upside, is our first resistance. And then above that, we do have a bear gap. This is from last week. This is Thursday going into Friday when the rest of the market was selling off on Friday. We gapped down here. And the bottom of that down gap is at 406, and it's a pretty small gap. It's just under 407, closer to 406.5. So it's a small gap, but it is significant. And then if we get above that, the average volatility for the past 30 days would take us maybe to 409. And then that implied move on Friday's contract is 410. To the downside, we do have this up gap. This is from last Friday going into last Monday. And we did see a little support there when we dropped down on that Monday before we gapped back up. This second gap we actually closed out at the end of last week, but this one is still open and could definitely be a support if we drop to it. Top of that gap at 401.44, bottom of that gap at just around 400, and then the 30-minute 200 moving average is just underneath that gap and within tomorrow's trading range. And just looking a little further out, we do have another up gap right here. That's just a little bit outside of tomorrow's trading range. That's at 497.45. And then we have the 1 hour 200 moving average at the very bottom of the trading range. And then 396 was the bottom of the implied move on Friday's contract. So definitely an interesting trading range over here. We are not bearish over here, and we're not bullish. We are neutral right now. To be bullish, we need this price to come back and trade back above the 35 EMA. And to be bearish, we need this 35 EMA to cross underneath the 30-minute 200 moving average. So quite a lot to look for. We could stay sideways. Dow futures right now are down 0.24%. I don't have that up here. With the others, I do need to add it, but that does bring us down to probably around this gap. So just something to think about. So there you have it, guys. All the levels that you need to know in all the indices to have an amazing day tomorrow. So have fun, trade safe, make sure you take profits when you're out.